Good evening. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening as we're here now on Thursday, the 1st of August, 2024. Let me start off with this. I made a note. Intel down, and these were 20, 30 minutes ago, 18%. Amazon down 5%. Snap down 20%, Apple down 2%, and you know the other numbers were there. DoorDash did go up nicely, double-digit gain in that one. There are a few others that had double-digit names. They're not everyday names, believe me. But my point is, sometimes you get what you wish for, and then you hate that you wished for it. And traders were yesterday on the joyous mode. You know that. The Fed's cutting rates, things are going to be good, and those of us, me included, were saying, why is the Fed cutting rates if the economy's so good? If the economy's bad is when you cut rates, because cutting rates is inflationary. So the Fed must see something that I don't see, is how I walked away, scratching my head, by the way, and thinking that I'm on this trip where I might be on psychedelics because I'm not seeing what other people are seeing. I'm dizzied from it, in fact, that they're all thinking that the Fed cutting is bullish. I don't see that. And I'm not going to change my opinion. The Fed's trying to cushion a break in a market that the stock market hasn't put in. And now it's suddenly, maybe, that schizophrenia moved, where yesterday was great, today, 24 hours later, it's all bad, all right? Because the stocks crashed today, as you could see from what I put back in my pocket. Well, maybe you don't call it a crash, but I consider 10% breaks in one day pretty serious moves in a stock, 20% for certain, all right? And, you know, you got certain that just refused to pick up. Microsoft down again. I think the company's in good shape. Look at Boeing. I've told traders to wait on this. You might get it closer to the 170 level. And by the way, what I did tell my traders, I said, if it were me and I had 100 shares to buy, just as an example, you know, whatever your number is, maybe you start at 170, 160, 150, and you see if the market's going to go any further, and if not, you play. And you forget you own those. You put those away for a year minimum, not a chart. They're too cheap. In the end, Boeing's not going away, and it's got a lot of good business. So that's one way to do it. I almost did that same philosophy, if you'll think about it, in the video when I started in December. I said, there is a point where you just got to own it and throw your chart away. I remember doing it. It was $450 a share, $458, I think. And I know that we peeled off shares over $1,000 a share. If you were in my subscriber service, I show it each day. It's there, and I can prove what I'm saying. Not all trades work out that way by a long shot. That's unusual, okay? If you think that's normal, what planet are you coming from? Don't get me wrong. Many people catch a stock, and it does go up 100, 200%. But NVIDIA isn't a story all by itself for what it has done. Amazon down, Netflix getting hit. It's one after the other. What is going on? Well, what's going on is, again, what you hope for might happen. And people want to get these rate cuts, and now they're pricing, and I'm telling you, they're pricing in like mad, 3 of them, because the market's now convinced that the economy's rolling. Well, if the economy's rolling over, then what we're seeing here, pricing power in some of these companies should be disappearing. And that's why some of these are down. Now, don't get me wrong. I happen to think Amazon on a good break is a phenomenal buy. I mean, their cloud services, their pricing power, what they have, along with Apple, they got plenty to play with in these companies. So this will be a time that you look to pick things up down the road. But as a chartist that talks to you, there's that time and place. It's one thing of investing, Boeing, NVIDIA. It's another thing for trading. And if you don't get that, I'm sorry, but they are very, very different. What I often see, and famous guys on CNBC, they'll buy something, and if it doesn't go the way they want, instead of bailing on it, it becomes an investment, and they hold it forever, hoping that the next cycle eventually catches up. And there's a lot to be said for that. I'm not knocking it. If you're willing to turn a trade into an investment and you believe in the company, C'est la vie. But don't call yourself then a trader. You're an investor. The non-farm payrolls, they're looking for 185,000. They had 206,000. Be careful of the jobless rate. If it goes to 4.2%, all of a sudden you're going to hear about the SAM, S-A-H-M rule. And what that rule is, and I'll give you the simplistic way to understand it. You go to a low point in unemployment, 3.7 is what we just had roughly. If you go to 4.2%, you go up 0.5%. In theory, that means you're going to see a recession within the next, let's say, 12 months. Does it work all the time? I don't know any rule that I could ever say works all the time except you're going to pay your taxes and die. Those are the rules that I do believe in. Everything beyond that, no. High probability, yes. Very different. Average hourly earnings expected to climb. This is not good, but we've seen this in the daily data that we're getting. Well, I should say monthly data we're getting from the regional Fed districts, but they're not looking for factory orders to do any good. They're saying in June they were down 3.2% from last month's down 0.5%. China, if you're counting on them for anything, you're wrong. Take a look at this. This is real big news. The Caxton PMI fell today to 49.8 in July. They just released this today. Anything under 50 is contraction. They got real problems there. You were 51.8 in June, and the Bank of England lowered its rates because they see the same thing other people do, slowdowns. They've got to start cushioning the economies, and that's why you cut interest rates, to cushion the economy. The Fed has basically been saying by not cutting a rate, and you know this has been the case, the members aren't convinced. They needed more data to see the market slowing. They'll get that data, and either they become convinced or they don't. But the market's getting spooked. Spooked means people trim portfolios. Remember we talked about XLU yesterday. Look at how this rallied. And of course, you get fear in the market, it takes off like that. You've got higher lows, higher highs. The market has been staying over the 18-day average. The trend is up with that pattern. You got through the Bollinger Band, and yesterday's where I think the pros should have taken money off the table. And today's another gain of nearly 2%. Doesn't matter. First challenge of the Bollinger Band, and you're not embedded. Doesn't mean it can't go higher. I'm telling you what I think the pros do, and I'll leave it at that. Those that are trying to pick a bottom and CrowdStrike, let it bottom on its own. This is catching a falling knife. Some people were buying here, and all of a sudden they're saying to themselves, what did I do there? I was trying to come in, and suddenly I'm out $8 to $10 a share on that. And, you know, it depends. You make a trade, and you'll say, well, I don't think it's a bad company. I think that this thing over time will resolve itself. Yeah, it will. But there's a $500 million that Delta wants without penalties. There's other companies. There's pricing that they've got to give. What are they going to do for their existing clients that go, well, you cost me this. What are you going to do for me? And that's why the market is coming down like that. Nothing I can say other than they made a big mistake. They released an update that did a lot of damage, all right? That's everything I'm hearing, including now the CEO talking about that. URA, I realize I have people that want to own it. Does that look bullish to you? You had an opportunity yesterday. This is called a bull trap, by the way. You don't know what it is until you get it. You lost the bearish embedded reading, so I think the bears came out of the market yesterday. Now, the only time you can re-embed is the day after you lose that reading. Today, it re-embeds. So it catches those people, goes down through that low. Now, until you get back through that high, there's real problems in this market. Hasn't picked itself up. Rivian, I was telling people as it was up here, I had so many clients, and you know, I was saying I missed it all the way back here. Well, I think you'll get your opportunity to come in. First of all, at 1447, right below you, you've got the 200-day average. That's your first big support number. Let's see how it does between now, the Bollinger Band that it just got to today, and that number for support. In Freeport, I'm going to repeat, how could this do well if you see that Caxton number come out? You know, copper gets hit on those type of numbers. That wasn't a good number out of China. China consumes 50% of the world's copper. This is not good for Linn. Not only did it come down yesterday, it's following through today. So, and what else? You see the embedded reading? You lose that reading tomorrow, and the odds are strong you're going to, unless you have a big up day, then you're opening the door to go back to wherever the 18-day average is. Be careful here, defense time. Same in XHB, which lost its bullish embedded reading. So when you lose that reading here, you made your run. Be careful. I said, why did these, and I said it yesterday to you, you're now talking rate cuts and you're losing all that momentum. Something's not right. Well, now we see what's not. Traders are coming out. I'm looking very quickly, not long term, quickly for price and the 18-day average to come together. In the financial service, same thing. You had the run up and it didn't like the fact the Fed's going to cut interest rates. Something else is happening in the market. So it's the old buy the rumor. We didn't get the news they're going to cut, but we got as close as we're going to get at this point in time until it's cut in September. I mean, we'll get more reports, obviously, tomorrow being one of them, and we'll see what that does. Look at how the industrial sector fell back all the way to that line in the sand and just held it. Where did it stop? You not see, and I said it, the first challenge of the Bollinger Band is often when you're not embedded, you hit the Bollinger Band. That's where I think pros, and that's what I teach. That's where they should take money off the table. And you'll say, how much? All of it. And you'll say, why? I say, because you're not embedded and you're overbought. And often you pull back where if you want back in, you can get in. I don't see anything now on that chart. It cut through everything. You know what the energy sector is doing. This market was good. It went up, challenged its band, right back down. So, you know, the way I teach Bollinger Bands, they're pretty easy to understand. You know, I always look at breakout points. You have sideways action. If you can close over this and go up, then you come down. You get big markets that have breakouts. They run and they'll come back. Always look for where a breakout point is. If a market gets away from you, markets that return there often find supported old breakout points, be it to the upside of breakout or a downside. In GDX, you're not acting like in the miners you got anything ready to get up and run. Yet the metals did on the whole. Silver market, okay, you lost the bearish embedded reading. So this should be where the market holds. And I'm looking for price and the 18-day average to come together. It's that simple. Copper market, never did embed, or did it? It certainly did. It lost it. Let me take you to that yesterday. Did it regain it? Yeah. So you had a bull trap that you've caught. You're probably going back down to that 200-day average now in that market before yesterday's high is taken out. That's how I look at it. When you catch the people, they go, what did I do? And they start bailing on themselves. TLT, well, you know what's going on here, fear. And it's not just fear of what the Mideast is. Now it's fear, hey, is the economy really slowing down that much? In the dollar, I don't see a trend. I see a market stuck at the 18-day average while the FXE is in a downtrend. It went down today for the first challenge of the 100-day average in quite a while, since the beginning of the month in the Bollinger Band. But trend it is down, but it is oversold. So I'll be talking about this and a heck of a lot more first thing in the morning, whether you trade futures, stocks, ETFs. At 6 in the morning, I record a video on the futures and cover many of the ETFs, if you think about it, since they're based on the futures markets. And from that futures market, we start looking for positions. Is there something to do? Where to do it? The charts will look like this. They'll be black. They'll have more studies. There'll be window envelopes on them with my other. I know they look for a moment confusing. There's only 5 studies. You pick up on it 1, 2, 3, and I mean that. And we'll talk fundamentals, technical analysis. Did something happen in the world that can move the market today? Example, one of these mornings I'm going to wake up and Israel got attacked. Here's what's going on. This is why this is going to happen today. And I do believe I'll be doing that shortly. I don't know when, but I expect they're going to get hit. You get free access to my reports. You get with our stuff, by the way, our QT mobile app. So every time I'm putting something out, you get a notification and you can read it right on there, whatever it is, and look at the charts and the videos. IRAPstein.com research. Move to the top here. You'll see an icon. It'll take you right into that combo package and take a look at it. I'm Ira. You have yourself a great day. I'll catch up with everybody in the morning. Take care.